Donald Trump's booming economy looks very different from behind the wheel of an 18-wheeler. Out on the interstates and in the truck stops, the signs are blinking red. Collapsing freight demand, empty parking lots where there used to be fights for spaces, and drivers running themselves into the ground for checks that come back negative. Layer that on top of predatory mega carriers and a food supply chain under strain, and you start to see what many of us on the road already feel in our gut. This is what a slow-motion collapse looks like. Trump's economy from the driver's seat. Official press conferences talk about strength, growth, and record markets, but trucking is one of the first places you see the real economy bend or break. When freight is plentiful and consumers are spending, truck stops overflow at night, shippers make you wait half a day to get unloaded, and reefer carriers are scrambling to cover loads. Drivers in this script describe the opposite. Lots of open parking, shorter wait times, fewer loads, and more companies quietly folding or cutting back. That's not just bad luck. Trump's tariff wars, especially his latest round of broad, illegal tariffs on key imports, have pushed up input costs and retail prices, including for groceries. Families respond the only way they can, by buying less, trading nice-to-have food for bare essentials, and cutting discretionary spending. Every time a shopping cart shrinks, there's one less refrigerated trailer to load at a warehouse, one more truck stop that feels eerily empty. Prime Inc., Western Flyer, and predatory leasing. To understand how fragile this system is, you have to understand companies like Prime Inc., the giant refrigerated carrier based in Springfield, Missouri. Prime runs the largest refrigerated operation in the country, with more than 9,600 trucks and 13,800 trailers hauling food and temperature-controlled freight across America. On paper, it looks like a success story. On the ground, many drivers will tell you it feels more like a trap. Prime has built its business partly on lease purchase deals that promise new entrants they can be their own boss by leasing a truck through the company. Federal regulators at FMCSA have warned that many such lease purchase programs across the industry are predatory, calling them legal ripoffs that leave drivers paying all the costs while carriers keep the assets and the leverage. In comments about these programs, drivers describe a pattern: huge weekly fixed payments, fuel and maintenance on the driver, and miles that mysteriously drop just when the truck is close to being paid off. It's a model that works only if freight is strong and constant, and collapses on the backs of drivers when the economy turns. That's the context for Prime's new strategic partnership with Western Flyer Express, WFX. In January 2026, Prime and WFX announced that Western Flyer's entire refrigerated division would be shifted into Prime's Power Fleet program, with WFX power units running Prime's refrigerated trailers nationwide. Official releases spin this as an expansion of capacity, increased freight consistency, and more earnings opportunities for drivers. From a driver's perspective, it looks like something else. A mega carrier that has burned through its own workforce, now needing to rent another company's trucks just to keep its food freight moving. Food, Tyson, and a strained supply chain. This would be worrying in any sector, but reefer carriers like Prime are the backbone of America's food supply. When they sneeze, grocery shelves catch a cold. At the same time, the meat and beef sector is going through its own crisis. Tyson Foods has announced the shuttering of its major beef processing plant in Lexington, Nebraska, eliminating around 3,200 jobs in a town of roughly 11,500 people. That plant could process up to 5,000 head of cattle per day, about 5% of total U.S. beef. Tyson reported a record $1.135 billion loss in its beef segment for fiscal 2025 and expects hundreds of millions more in losses in 2026, even as it cuts capacity and jobs. Cattle supplies are at their lowest levels in more than 60 years, and ranchers are furious as cheap imported beef from countries like Argentina is floated as a way to hold down prices. For drivers, this means fewer domestic loads, more unstable rates, and constant uncertainty about where the next week's freight will come from. For consumers, it means paying more for meat, while the communities that produced it are hollowed out. Here's how those pieces fit together. Fewer cattle and plant closures equals fewer domestic beef loads. Higher grocery prices from tariffs and supply issues equals consumers buying less, shifting demand. Mega carriers that overexpanded during the COVID freight boom now face lower volume and softer rates, but are still locked into expensive fleets and punishing lease schemes. In that environment, a partnership like Prime WFX looks less like growth and more like a stopgap to prevent a service meltdown in the refrigerated sector. When a carrier that once printed money during the COVID boom now needs to borrow another company's trucks to cover its core lanes, it's a warning sign for the whole system. Drivers as shock absorbers of a failing model. What gets lost in the corporate press releases is who absorbs the shock. Drivers. FMCSA's Truck Leasing Task Force has documented how lease purchase deals routinely push truckers into working 70-plus hours a week, sleeping in their cabs while guarding their loads, only to end up broke or losing their trucks when freight softens. One industry commenter summed it up bluntly. Carriers use these leases to pay for their fleets, then drop drivers miles and force them out, re-leasing the same truck over and over. Drivers running out their 70-hour clocks and still seeing negative settlements for weeks, cult-like loyalty breaking down as people realize they're working for nothing, and once fierce defenders of Prime suddenly turning in their trucks and walking away. It's not that the freight market never fluctuated before. Truckers have always felt the economy first. The difference now is that those swings are being amplified by policy choices from the top and by business models that push all the risk downward. Trump's fingerprints on the mess. Trump didn't invent predatory lease purchase schemes or corporate greed in trucking, but his policy mix has poured gasoline on the fire. His broad tariffs have raised input costs and consumer prices, especially for food, helping drive the grocery inflation he once promised to fix. His administration's hostility to regulation and labor protections has left drivers with fewer safeguards against abusive contracts, even as federal task forces warn about systemic exploitation. On top of that, his second-term deregulation spree, gutting environmental rules, slashing enforcement, and prioritizing short-term profit, creates a race to the bottom where the cheapest, most exploitative carriers win contracts, while safer, more sustainable operators struggle. A failing economy isn't just about GDP. It's about whether the people who actually keep the country running can make rent, see a doctor, and come home alive from a week on the road. In that sense, the massive trucking company collapse the narrator fears isn't just about one carrier like Prime Inc. It's about an entire ecosystem stretched to the breaking point. Meat and food supply chains shedding jobs and capacity. Mega carriers propped up by risky lease schemes and now scrambling for outside power to keep freight moving. Drivers treated as disposable shock absorbers for every bad decision made above them. If, or when, a giant refrigerated carrier truly implodes, it won't just be a line on a balance sheet. It will be empty shelves, panicked just-in-time warehouses, and thousands of drivers and food plant workers suddenly cut loose in an economy Trump insists is the best ever. What collapse would really mean. So when a veteran driver says he sees the early signs of a big collapse, he isn't just fear-mongering. He's reading the road. Strange freight patterns, desperate corporate partnerships, hollowed-out towns like Lexington, Nebraska, and a political leadership that shrugs off the human cost as long as the donor class is happy. If this continues, the United States risks learning the hard way what happens when you treat truckers as expendable, the food system as infinitely flexible, and tariffs as a toy for political theater. A real collapse in a mega reefer carrier under these conditions would not just hurt drivers, it would expose how fragile Trump's great economy really is. And when that day comes, no amount of spin from Washington, or from corporate headquarters in Springfield, Missouri, will convince hungry families and jobless truckers that this is winning.